Hello and welcome to another episode of the SwingTrader Status Update. This is our weekly show that we do every Tuesday, live at 5 p.m. Eastern, and we thank you very much for joining us. I'm Justin Nielsen, and joining me as he does every week, it's Mike Webster, our senior market strategist over here at IBD and the main brain behind SwingTrader. And we've got a lot to talk about, Mike. I mean, yesterday, I don't know how to say it in any other way, but that was ugly.
That was a quiet day. I don't know what you're talking about. Very little
exactly.
movement.
Yeah. So depending on what you were invested in, it was a very different, market. And just as a kind of point to that, I'm going to start sharing screens real quick. I'm going to pull up Market Surge, but why don't you go ahead and give your initial thoughts here?
So
while I'm doing that.
Yesterday was actually a great day. Now forget about if you were in stuff that got killed and everything. It was still a great day because it gave us a lot of information about this bull market. During a bull market, you're going to get occasional news events that come out of the blue that there's no way to prepare for. And you're going to get shocks, but you're also going to get them on the upside. The upside are never as big as the downside. Maybe they'll go up a quarter of whatever you end up on the downside. But that was like, if you're playing poker and you're playing, maybe just a home game and someone who's got like very easy tells, that's what it was like yesterday. You really saw where everyone was just running and heading for the hills and leaving things for dead, and where they were putting their money into. And that is so much great information. And if you got killed in anything yesterday, you've got to do, the Ted Lasso thing. The on Apple TV, there was this great show called Ted Lasso, and the guy talks about how a goldfish has the shortest memory. It's like a 10-second memory or something like that, and you just put it out of your mind, and whatever happened, it happened. Learn from it and write rules about it. Maybe you were too heavy in the AI space, and now you realize this stove is hot, so you don't do that next time, or benefit from whatever you learned yesterday, but forget about it and move forward, because this is a bull market and it looks like we could go a lot higher, frankly.
Mm-hmm. Right. And by the way, just before folks at us, I did read something where that is actually a myth about the very short term.
No, don't tell me that.
I know exactly.
I believe everything.
I also told you the same thing about frogs boiling in water, and stuff. So sometimes it works in your favor, sometimes it doesn't. But
I didn't hear you. I'm going to use that goldfish for the rest of my life.
You do what you want. And again, when you say great day, again, it's not to minimize what.
No, not at all.
I mean, look, I got, I had a 5% drawdown. It was ugly, so, but it was useful, maybe is the better word in terms of the information that it gave. So let's talk a little bit about that.
Sorry to step on you. I could easily see that a lot of people probably had a 20% down day yesterday. Yeah. Easily. Yeah. Like, and if you're heavily on margin, could have been a lot worse than that. And I feel terrible for anyone who was in that situation. But it still was a great day from an information giving standpoint. And if that happened to you yesterday, that's, if Bill were here, he would say, okay, that's great. He also told us back in 2002, during the 2-year long terrible bear market that was like just like the 1929 to 1932 crash. He said that was great. And I hated hearing that from him. He's like, oh, this is great because it's going to teach you to not make bad mistakes. And it's good, and you're going to learn a lot. And it took me about a decade to realize how right he was. And, maybe a decade from now, people will realize that what I'm saying about yesterday being so good is very true, because it's
because of the opportunity that it, again, Bill would always say about bear markets. And look, that bear market that you're talking about, that was a 79% drawdown in the NASDAQ composite. It's hard to really kind of call that great, but he always looked at it as great opportunity, whether it was as a learning lesson, to get information, what have you. But one of the things that we were talking about yesterday that was such a sharp contrast, and again, very, very interesting, for as ugly as the NASDAQ was, you looked at the S&P 500 and that got support at its 50-day moving average line, which was interesting. And then you look at RSP, which is the equal weighted of the S&P 500, and it was a very different picture. The gosh darn thing was up yesterday, not there by much, but the fact that you had such a ugly day in so many areas, that having RSP up was something that was kind of a little bit of a shocker, to be frank.
Yeah, and that was the tell. It
Mhm.
was the let's pull up NVIDIA because that's
Mhm.
kind of where everything stemmed from. And why don't you talk about the news in case someone was like
Yeah.
maybe traveling or something, they don't know what we're talking about. Why don't you
Right. So
tell them what
the,
happened?
the the big thing is DeepSeek. Okay. So for those of you that aren't aware, I would highly recommend some of the articles that Reinhard Krauss has written. Ed Carson has put some stuff out there. I think Jed Graham is going to be writing something. So there's a lot of information to just kind of know about DeepSeek. Remember that a lot of this speculation in areas like Nvidia and a lot of the power companies, energy alternative, how we're going to power all this, like things like GEV, for instance. And we'll talk about that in a little bit. So a lot of what was going on behind this is, okay, for the infrastructure of AI, you're looking at some huge costs that are going to be. People are going to need these chips. Nvidia is going to benefit from that. People are going to need energy. Utilities and power folks are going to benefit from that. Well, this DeepSeek outfit out of China comes in and says, look, we came up with a comparable product with DeepSeek to Chat GPT and all these things that people have been investing huge amounts of money in, and they're basically like, hey, we did it for about 5 million. So if that is truly the case, and now look, this is news out of China, so you have to approach it with a little bit of skepticism in terms of what those numbers are. But Ed Carson made a good point today. Let's say it's 50 million. Let's say it's 10 times that amount that they're saying. That would still be a significant reduction in the cost of doing something that is maybe 90% as good, or something like that, as Chat GPT and some of the other big players here. So if that's truly the case, well, then maybe you don't have to have all these costs for the or as much of the cost that a lot of people were valuing in for future, and that, of course, big hit to Nvidia, big hit to some of the power companies, big hit to a lot of these AI related companies. But one of the areas that didn't quite get hit was software. So tech, it was very uneven. There's a lot of these software companies because, well, for them, look, if you can do it more efficiently and at lower cost, that's just going to benefit the companies that are actually coming out with the use cases for this and able to monetize on this, what is potentially a very big productivity booster. So that's kind of the wrap up of again, why things were very different. And then of course you had things like Walmart, and I do have a position in Walmart still, that you know weren't affected at all, right? They just don't have that much of a AI exposure, and so things like this were doing okay. I mean, XLP, the staples, the staples, I mean, that was up, considerably in what would normally you would think of as a defensive mood. Where do you go when things are crazy? You go and hide. Usually you're going to hide in the things that people are going to buy anyway, like Campbell's soup and Hershey's and all of those, different staples, Procter and Gamble. So that had a big day yesterday. And look, I mean, today there was a little bit more of maybe this isn't as bad as we thought. The NASDAQ was up 2%, recovering a lot of the ground lost yesterday, not filling in the gap, but certainly looking much better than what could have happened if it was like, oh, this is really, really bad. So sometimes we're looking at things and saying, is it overdone, or is this just the beginning of some more ugliness? So
Yeah, so that was a great summary, and this is what I would add to that is we don't know. I don't know that we'll know anytime soon if what China is saying is 100% true, 0% true, or probably somewhere in between, right? In
Mhm.
all the big outfits, big mutual fund companies and hedge funds, you better believe they have all their analysts and all their contacts trying to figure that out right now. And if they figure it out that it was untrue and that China really spent $10 billion and this whole thing is just kind of
Yeah.
a game, a U.S. versus China type of thing.
Gamesmanship, game
Yeah,
theory. Like, how can
that,
we mess with you?
yeah, that will come out, at some point. But for now, because we don't know if that comes out tomorrow or that comes out 3 years from now, you have to play off the charts. So let's look
Mhm.
at the SMH, for example. And I really don't, really want to warn people against going into what's a broken chart. Like this is a broken chart right now. And if you've looked at enough charts in your life, you'll know exactly where a chart breaks. And it broke yesterday. Sometimes there's subtle breaks. And sometimes, they're obvious. This was obvious. And when it breaks like this, it's very rare for them to just go straight back up to highs. Typically, they're either done for a long time or they've got a base build. Most of the time, they base build. So you've got this, if you looked at just like a distribution of the events, it's like, you got your both tails with going straight up, or the base building is the meat of that, the middle of it.
What usually happens, the
Yeah,
norm. Yeah.
so you just have to, just not trade these for a while. And if you're in them, like, and let's say you froze yesterday, because that's a very typical thing for someone to do. Let's pull up ARM, for example, ARM, that broke out of a really loose, very, very, people should study this one, a very wide and loose cup with handle, cup with long handle. I mean, if Bill were here, he would be like salivating over how great of an example this would be for a bad looking base, for
Mhm.
a workshop. So each one of those weeks is wide and loose and never tightened up. And then it tried to break out. And even if this news didn't hit, that base shouldn't have worked out because it needed to tighten up. And even NVIDIA was not in position.
Right.
Someone brought us up. Let's go to NVIDIA again on
And,
a
and and
daily.
and to be clear, when
Yeah.
you say it shouldn't have worked out, it's an odds game, right?
Yeah.
You know, you can find plenty of bases that just are ugly and shouldn't work, but they do. In the same, vein, you can find some perfect bases that just don't work, so but it's an odds game. As you said,
Yep.
there's that distribution curve, and here's where you're going to find the norm for this. So you wanted to go back to NVIDIA?
Yeah, just on the daily. And so someone brought it up to us last week and they're like, oh, when it was poking back above the 50, why don't you guys put this back on SwingTrader? And we looked at it, we're just like, it's just not acting right. And by acting right is like, when have you seen that work out from there? Like, again, the odds, it just needed more time. It needed something. It needed a base. It needed, to tighten up and have a stronger relative strength. It needed a bunch of things. So that's not saying that I dislike NVIDIA or that I like NVIDIA. It's just, it just wasn't right. So if you're in these, I would take advantage of the bounce that we're having right now and be scaling out of them if you didn't blow them out yesterday. Because lots of times when they get breaks like this, they can roll over a lot more. That's the norm. Like maybe you get one more day up, runs into resistance, and then comes down and tests the recent low. So be very, very careful, because these things are probably dead for a while, but we'll see. It depends
Mhm.
on the news. Now we've got lots of earnings coming out. We're in the heat of earnings season that is just really getting going this week. We've got the Fed tomorrow. No one thinks they're going to do anything, but it's what does he say? And let's go back to the Nasdaq and go to December 18th, which was the last time that Powell spoke. And that was a disaster, frankly. So we'll see if he fixes that or puts fuel on what he said before and how the market handles it. So it doesn't matter if we knew exactly what he was going to say and how he was going to say it, wouldn't matter. It's how does the market interpret that tomorrow? And they could just say, okay, he's only going to do one cut this year, and we're fine with that. and we move higher. We don't know. And then on Friday, of course, we've got PCE. So we got tons and tons of info that anything can happen. But what you do is you trade the trends and the things that are working. And let's go back to the RSP that you brought up. This is what I'm leaning heavily on to stay bullish, is that this handled itself so nicely when it, ever since it came down to the 200-day, it ran up, and now it's just hugging just right above the 50-day. And that's what you want. You don't want it to go necessarily straight up from the bottom and straight up to new highs. Remember, this is equally weighted, the 500 stocks in the S&P. So this is your average stock, and it's just halfway up in the base. And this could easily, come down to 180 and still be normal and natural, but we prefer to move, just keep on moving up the right side. So as long as this looks like this, and let's go to SPY. SPY, to me, I have a position in it that it looks like it wants to take out the highs. That's what it's set up to do, that because it came down and it tested the 50, tested the 21-day yesterday, was able to close up near the highs. We put, for the first time since I've been back at IBD, I think was yesterday, we put a triple on the U Pro, which is a 3x of SPY. And I did that because we had a very well-defined risk, which was yesterday's low. And we said, okay, if this is going to work, we wanted to have some more juice here and do a 3x. Now, if you're playing along with SwingTrader, you can just do a single. You don't have to do a double or a triple when we do it, but that's what we wanted to do. And I think that makes sense. There's a time to do a triple and there is a time not to. And yesterday was the time, because you had a very, very tight logical stop, and it still remains yesterday's low. So I think that the health of the market is good. Let's go to IGV, which you were talking about, the software. In the software space, it's like all the money. Think of all the billions and tens or hundreds of billions of dollars that flowed out of all the chips yesterday, and all of the the cooling, and let's go to like UTES, which is a bunch of utilities that are basically AI plays. All of those got hit. That money, people selling it.
When have you typically seen utilities down 10%? Like,
Never.
I mean, it was nuts. Like XLU, wasn't as bad as Utes, but it was down 2.3%. But yeah, utilities down 10%. That's like, really, really unusual. I'm sorry.
No. I appreciate it, because I'm having a bad voice day. So please talk as much as you want.
Right.
So the point is that money is going to flow somewhere. It's either going to go into the bond market, it's going to go into cash or cash equivalents, or people who are trading AI stocks aren't the type that are going to take that money and put it in CDs, not music CDs, but like CDs. And
certificates
so
of deposit.
so that's going to flow into somewhere else. And it feels like the most logical space is IGV. And, but we do have a bunch of earnings in that space right now. So that could be a problem. But let's take a look at like ServiceNow, which.
And I do have a position in ServiceNow.
Okay, and that reports in a day, and that looks good, and it's this nice little cup and without handle that if it's got good numbers, you'll probably be 1,300, and if bad numbers, it'll be 1,000. We'll see how that plays out. But let's also look at CRM in that same space that is moving up the right side, and that looks like it it wants to handle out. So, or we hope it handles out to give us an entry point. So. There are a ton of these, and I was going through my screens today, and the reason why we're so heavy on SwingTrader is, frankly, there was so much merchandise. We could have easily put another 10, 15 names on that were in position. So that gives you feedback too for the market. That now we will, how fast we are. We will change on a dime if we get negative feedback from the market, but right now, I'm looking at yesterday's shakeout as a great opportunity, and in a massive rotation.
Yeah. Well, you know what? Okay. I want to go to our pie chart real quick.
Sure.
because I think that there's some really interesting talking points here that we can cover. And yeah, we are going to try and keep this under 3 hours. That's the goal, just so everybody knows.
You do know
But
who's on with you, right?
so this is where the pie chart was on January 21st. So a week ago. Utility, we had transportation with UAL. ETF, a big one was QLD and ARK-K. Energy, a lot of AI exposure there, between the utilities and energy. We also had chips, software. So there was, I wish I could like kind of say what our AI exposure was last week, because it was pretty heavy. And this is one of the things you have to recognize is you might have all these things you can put in different categories on this pie chart, but if you're exposed to AI, in all of them, there's a risk there. You have to just be aware of that. I remember this back in the aughts when China was, I mean, it was all about China, right? Well, you could have bought a cell phone maker, a metals, producer, a real estate,
Fertilizer.
hotel. Yeah, so all of these different things that you could have done that were all kind of China exposure. You could say, oh, I'm diversified, but you had highly correlated assets. And that's what we were looking at in a lot of these AI themes. The utilities started getting highly correlated to AI and chips and all these different things that they're normally not correlated to. So you do have to be very careful when you're, making a heavy bet. It's okay to do it, but you need to realize what the risks are. You need to go in with your eyes wide open, because, and again, this is why I took a much bigger drawdown than I wanted to, is what are you going to do on a gap down? You can have the tightest stop in the world, but if you gap down below it, what good does it do? You can only manage risk for what you can trade. And if it's, if it trades through your stop, well, and that's what happened to me. A bunch of things just traded through my stop, down 20%. Now, I didn't have as large of a position in those. I wasn't on margin, but it's still, again, I got hit. So let's take a look at where we're at now. And there's a big chunk that's software between a position in IGV, some other software. They might be doing different things in software, but it's still software. But we also have kind of spread out into retail, apparel, a lot of consumer type things. And then our ETF exposure, rather than being heavy on the Qs, which was, again, a lot of AI because of the way that the market cap weighted goes there, we're more heavily in the UPRO and ARK-K as our ETF exposure. But yeah, any comments on the?
Yeah. So, I mean, with the exception of the QLD, which, we took off yesterday, I believe, when it was, getting hit so hard, we had exited our, direct AI exposure last week, and for various reasons. Maybe we can walk through one of those to kind of see, why we did what we did.
Yeah. And again, it has to be commented that a lot of times we're making decisions not because we're taking profits into strength. We're trying to avoid dead money where something is going sideways and pausing. GEV is an example, of that. Maybe, look, we had a 20, we had bought this and we had a really good gain on this. And so on Friday, with that close, taking out the lows of the last couple days, that was kind of our rule. That's one of the things when you're taking out lows of 2 or 3 days, a lot of times, okay, well, we'll just take our profits and run. I wish I had done that. I ran out of time on Friday and I didn't do it myself. And so, yeah, I took a big hit on this. Shame on me. I should have been following SwingTrader. Why didn't you tell me, Mike?
Well, I said it in Slack to remove it, but
I might have sent the alert.
Yeah, I wasn't expecting this. Obviously, it was news that came out. I was expecting it to come into like 380. I thought it was going to base build, frankly, and I thought it was going to build flat base. And when you're swing trading, like if I was position trading that, you'd still be holding it. You would have sold a large part of your position, but you would have been holding a core because it had the power from pivot. It was in the right space. It's a new issue, and had all these positive things for it. But from a swing trading hat, now sometimes doing the position trading is the market favors that, and sometimes swing trading favors that, and sometimes variations of swing trading is in style. So with this, it just kind of lined up perfectly, and we would do the same thing again. Maybe we might have held a quarter of the position going into the weekend, but it was really like it looked like it wanted to at least come into 400. So why not lock that in and put the money into something else? So
with every intention probably of buying it back after it came in and bounced, right?
Yeah, and now that it's I'm sure the question is like, okay, do you buy it back now? You had this big upside reversal, huge spread up 7% and all that back at the 50-day. No, like I don't want this now, because you got to think, don't think of the normal people trading, think of the big people trading with hundreds of thousands and millions of shares in it that didn't get done yesterday. Maybe they have 2 million shares that they want out of, and they only got 200,000 shares done. They're going to be looking at days like today, or let's say they manufacture get some news out there to get it up to 400. They're going to be selling into that because they're going to be remembering the pain from yesterday. That's a whole overhead resistance type of thing. So this needs time. The time is the only thing that's going to heal this, in my opinion. Now, you can get a one-off and maybe it's at 500 in 2 weeks. Anything can happen. Very unlikely. So I would take this opportunity. If I didn't sell it yesterday, I'd be out of it today for sure.
Yeah. I also want to just kind of mention real quickly, because some people might have been asking, well, were your alerts broken? You guys didn't seem to do much at the beginning of yesterday, at the open. And that was by design, because a lot of times there's, again, some good information you can get by seeing, okay, how do things handle themselves? So, GEV initially, looked like it was trying to come back. Doesn't mean it wasn't broken, but you don't necessarily have to sell right at the open, because you could be selling at the lows. But certainly as it started coming in, at least this is what I did, is, I got a little bit of a better price than I would have otherwise. Same thing with, QLD, where we didn't initially sell it. We were kind of like, oh, okay, well, we're getting a little bit of a bounce here. Let's see what happens. And then when it started coming in, we're like, okay, let's lock that down and get out of this, because again, this was a significant thing that we had to protect ourselves from.
Yeah, and we do the same thing again. Like, let's go to the daily on that. That we would have still blown out the position. You had gapped down below your 21-day, below your 50-day, and most importantly, what I'm calling like my equator line, which was the low of the day before our follow through that we didn't need. And you had gone below that, and you were trading below that. Yeah, actually the day before that, the low of that day, because of the gap up. Yeah, that one. That's what I'm calling the equator line. And we had traded below that all in one day. And so it was time to exit that. So let's go over to SPY, which was a little bit different. That one held above. If you go to the day in question there, it held above it. And that's why when we went back in and started increasing exposure, we, after we got rid of the QLDs, we went with the UPRO because it had held up so much better. And that was just the information the market was giving us. But even knowing that the QLDs came back so much today, we still would have blown it out yesterday, because that's just our rules. That's just how we trade. It was way more of a loss than I wanted to take. But we had to take it. It blew, like you said, it blew through our stops. Mm-hmm. So it was like it lifted, and I didn't want us to sit there and then have it roll back over and take out the lows of the day and then be in a really bad situation. So yeah, when you get those gap downs, we were trying to be very methodical with things rather than doing it all at once. Just kind of like a TWAP, a time weighted average price, which some brokers offer, where let's say you were in GEV and you're like, oh shoot, I've got to sell this. You don't want to get the lowest price. You can just put that in and put the TWAP for 2 hours, 5 minutes, the entire day, anything that you want. You can always adjust it. Once it's in, it's not set. You can always, speed it up or slow it down or cancel or modify. So
yeah. And you know what, I will say that, just for some people that were asking about kind of drawdowns, again, my drawdown personally was a lot more, but for SwingTrader, we were down roughly 1.5%. With the S&P 500 down just a little bit less. But normally on a day like that, you would have expected us to be down significantly more. So again,
and we were happy coming into the day. We just didn't have the AI exposure.
Yeah. We just had taken profits on a lot of our AI exposure. And we had some things like Twilio, for instance. We can go there. I do have a position in Twilio myself. And also,
so do I.
In the same way that I just said that we have no idea that this was coming, we had no idea that Twilio was going to pre-announce earnings. We put this on at the end of the day. Thank goodness it was the end of the day, because I had, we both had 3 minutes to buy it before the market closed.
Why don't we do a change date back to where we put it on, because it's so compressed now, it's kind of hard to see.
Yeah.
Because it was a classic entry, frankly. So it was, we had tried this before, I believe, or at least I had, looking at it as a high tide flag in spirit, where you had this flagpole and then held in tight. And lots of times with high tide flags, you'll get a false breakout early on. It'll break out and then come back in. And then you got to be willing to buy it back 2 or 3 times. That's very, very common for high tide flags. And so Bill wouldn't call this a high tide flag, but I am, because it's just it's a variation. It's a
high tide flag in spirit.
Yes. So when that undercut its recent trading action, came down to the 21-day line and had an upside reversal, I had bought it in my personal account earlier in the day, but I always sacrifice my best trades to put on SwingTrader. So I sold it, put it on, and we had to wait. It was 3 minutes to the close where we could buy it back. So I was buying as much of it as I could get. And then I was buying more in after hours before I even saw the news. I was just going like, this looks so good. I need to get as much of it as I can. I kept buying it and buying it. And then I saw it lifting and I'm like, oh, is this lifting because I'm buying it? I'm like, can't be. And then I found out the news that happened, because then it really ended up starting to go. So this is kind of classic. And it was also telling you that, let's go back to the current day, that when this is happening and this one was still holding up on Monday, yesterday, that the market couldn't be that bad, because normally this stock would have sold off, because everything would have sold off if the market was going to implode. Now we reduced it yesterday just to lock in some gains, and I really was reluctant of doing that, but I wanted to, just get it to a size that if the market did totally crater, that we didn't give up those gains. We had to lock some in, and I'm just looking to increase that position again, but it's just too extended out of position to add to it right here.
Yeah. Speaking of something that got extended pretty quick, we put on Royal Caribbean this morning, and unfortunately, this one just came up so quickly. Once the restricted period was ended, it was still a little bit too, and yeah, it was just a little bit too up there for me. So
I did buy it as soon as our restricted time was up, because we've got that 30-minute, but we put it on right at the open. And this is one of my favorite names, frankly. I love cruising. It's a great way of traveling as far as I'm concerned. And I think Royal does a great job, and they had their earnings. They also said that they were going to get into the space that Viking is in, river cruises that my parents loved going on those. And so, and that had a nice shakeout and looks really good. I think people at first it was like, oh no, Royal's coming into the space, it's going to kill them. And then I think by the end of the day, they realized, no, this is a big, the whole TAM thing, the total addressable market, that there's plenty to go around. And so I think that one looks good now too, because you had that shakeout. Frankly, I should have bought some, and I didn't. I might be buying some tomorrow. But so the Royal, I think, looks really good. But let's go back to Royal for a second. What's normal and natural after a big breakout like that is to have an inside day the next day. So it's very possible that this could come into 250 to 255 tomorrow and still be totally normal. So just if you're in it or maybe you missed it, that could be your opportunity, because I hope it just keeps going up because we've got it on and I've got a position in it. But you also always want to know what would be normal and natural, and an inside day tomorrow would be normal. Can we, because I know we're almost out of time, can we go to those dates that I wanted to look at and go back to 07, if you don't mind?
Yeah, let's see.
So February 27th, 07. Why don't you tell them what we're looking at and why?
Well, a lot of times when we have a day that's so unusual, like yesterday, Mike asks me to, do a little bit of work and kind of say, hey, are there days like today? Can you find days like today that we can look at, and then we'll look at that day, see if it oh yeah, it has kind of the same feel, and then what happened afterwards. And so we went,
February 27th.
Yeah, I went into the database, took a look based on some just basic criteria yesterday in terms of, how many ATRs was it down? What was the position in relation to its moving average lines? And this is a day that came out. And I remember this day in 2007. They called it the Shanghai Surprise, if I'm not mistaken. And I'll be honest, I can't even remember what the surprise was, but there was news out of China that, and remember, this is again in the aughts when China was, really crazy growth rates in a lot of these companies. And I can't remember what it was that came out on this day, but it really knocked things for a loop.
Yeah, and so this is the very similar setup. So when we started, I gave you some basic criteria, and then we only got like 5 names, and then we loosened it up, and then we got the phone book, and then so tomorrow the two of us are going to have to go through and find some sort of happy medium. But this is the first one that really jumped out that looked like today. And so then the reason why you do this is say, okay, history repeats itself because everything is based off of human emotion, fear, greed, hope. And so when this happens, you're in a nice market like we were. And then out of the blue, you get this really abnormal break. And we were up near highs. We crashed through the 21 and the 50, close in the lower part of it, all like what happened yesterday. Then what happens next? So let's just go out a month or so. So that would be normal and natural. And then let's go out to October, because we know what happened in November.
Yeah. And by the way, 2007, just as a point of reference, wasn't easy. There were a lot of these things where you're making progress, whack. You're making progress. And then there was a lot of kind of choppiness in here before we had the follow through day in August that really led to a very powerful rally through the end of the year.
Yeah. So going back to the time in February, that first break, what is so interesting is that the total similar setup, and then that took another couple of weeks of going lower before it truly bottomed. And then you didn't really know that you were out of the woods until you were back above your 21 day and above your 50 day. So that looks like in April there where your low is above your 21 day and you're above your 50. So right there, that's really when actually the day after that, because then your low is above both of them. That was your true signal that, okay, you're out of the woods. So now let's go to our current market with that in our mind. And it's like, okay, we got our close back above our 21 day and our 50, but we need to get the low above both of them and close up on the day before we're out of the woods. Now let's go to SPY and see how different that looks. So in this case, we're almost back to new highs. Our low isn't quite really above those, but in spirit, it almost is. And we made it through that 600 psychological level in a really big way. Let's just hit 2 more dates and then we'll call it a day. August 17th of '09 on NASDAQ. Yeah, the 17th. Okay, so another one that you found not quite as spooky as the last one, but still similar, a bad day closing near your lows after at highs. Let's just go out a month or two and see how this one played out.
And remember, this was after the March follow through day, after a 57% correction. So this was, a lot of damage had been done. We had a nice rally off the bottom. It actually took a while for growth to come on board. At first in March, April, May, it was really just your things that had gotten knocked down to single digits, like Bank of America, Ford, Citigroup. The things that had a reverse split just to stay on the New York Stock Exchange. Those were coming off the bottom, and it was a while before growth really kicked in.
Yeah, that was what a terrible bear market. So this one you can see, if you can just point to it, just looks like a blip on there, August 17th, that, over to your left, I think. Yeah.
Oh, there we go. Mm-hmm.
Yeah, there, just a blip, and then you just go right back up. So the two of us will look at a lot more of these, over the next couple of days and share them with you. But maybe that's what we're in for. But there's one we've just got to be fair and intellectually honest that didn't work out so well, and that is February 24th of 2020. And I don't want to scare everyone, but you always have to look at both sides of things. Now, there's a lot of reasons why this doesn't look like it anymore, but at least on this day, the 24th.
Oh, yep.
So similar type of thing. The only difference is you are already like 2 days coming down, near your 21 day, but then you have this big gap down. Now, obviously this is COVID, and so we're not dealing with anything like that. So let's go out like a month or two.
Well, and real quick, I just want to, for those of you that have been with SwingTrader for a while, if you remember, and again, this is when Mike was kind of leading the charge here. We had sold a lot of things into strength in this period. We couldn't find anything to put on to replace those things. We wanted to. We're like, things are just working, so we want to put other things on. Couldn't find anything. I think the last thing that we had on was GDX.
I think
or
so.
maybe it was GDXJ. I don't remember which one it was.
Yeah.
But it was one of the gold mining ETFs, and we finally took that off. I think on that day when it when it dropped so much. But it was we were pretty much in cash.
Well, that's
when that happened.
Yeah, I remember as we were going into before that day, the last few days before that happened, I was saying don't let me put anything on that's not in. We would always, we need to get back to that, but we would always rate things. I'd say, okay, this is an A, this is a B, this is C, and so on, and then you'd have it in your spreadsheet. So then when it was time to sell, we'd like sell our C's and our B's and try to keep our A's. And it's a really good thing to do, and I've done this for a long time, where when you're either getting kicked around, you're just out of sync, which happens all the time, or the market's out of sync, or both, that then you just restrict yourself to those perfect pitches, the A quality stocks and an A setup. And I said, the things just didn't seem right, and let's only buy A or A plus setups and A plus stocks. And there just weren't any around. Now, that's different than today. Like today and yesterday, I was finding setups all over the place and quality names. And let's go back and just show, if someone didn't trade back in 2020, what happened. Let's go out to like June or something. That's fine. So that's what ended up happening. So that's on the downside. And I don't think that's happening. There's no reason for that to happen. Anything could happen, but the news that we got AI related, like you said, shouldn't impact the Walmarts of the world.
Right.
Shouldn't impact.
You know what? There was one more.
It's going to impact the NVIDIA.
Right. There was one more that we had on our list that we
Oh,
tweeted out. So let's just cover this real quick,
I have
and
a
we can wrap
position
things
in it.
up.
Why don't you talk about it?
What's that?
Why don't you talk? I do have a position in it, but why don't you go through it? Because I'll take 10 minutes to do it.
Right. Okay. Yeah. I do have a position in this one as well. And this is one that I'm trying to remember when we put it on, because I think we've tried this a couple times. And our most recent one, we put it on the 22nd.
Yeah, the
So this
22nd
day
one.
here, and it kind of, came in, didn't have a great close. But again, as a reminder for folks, what we've been doing is we've been locking in some profit quickly. We're not adding to our positions. We're starting them off full. That's really actually been working out well so far this year. We're getting really good outperformance this month. And kind of building on the outperformance we were getting at the end of 2024. So it's been working out well. We did trim a little bit on Monday as we hit our first target. We're using kind of ATR targets. And look, we wanted to kind of maybe get a little bit off of this just in case. But earnings I think are maybe coming up. We got a nice gain today. We're probably going to be taking some of those profits into strength as earnings get closer. But if we have enough cushion, just like we did with United Airlines recently, we held that through earnings. Didn't it was great until it wasn't. But we will kind of hold some of these
And
through
we might get
earnings.
back into UAL. I mean,
Yeah,
it looks
right.
good. We tried Jets, but there was one, I think it was JetBlue that
JetBlue.
got hit
JetBlue
today.
was
And
down like 20% today or something like that.
yeah,
So
so that,
again, that's sometimes this was a discussion that was happening on the YouTube comments live here. Some folks were looking at the top gainers, or not the top gainers, the top weights in IGV, and they're like, you know what, I don't like those top weighted stocks, like Microsoft and Oracle and things like that. And they were like, you know what, I think I might just go with some single stocks here, which is totally fine.
I
We've got a little
yeah,
bit of
I would say I totally see their point, and
Mhm.
they are frankly right. But with this product, with the best ones like ServiceNow, I think is the best one in this space. Earnings are right around the corner, so we
Yeah.
couldn't put it on. And yes, if I could get an IGV without Oracle, I would be very happy. But
Right.
I didn't see one, and if
Yeah.
there is one, let me know, and we'll try that one instead. But
Well,
yeah,
cybersecurity, if we want to kind of go into something like this with a bug or a hack,
I was looking at all of
yeah.
those today. Now the problem was a lot of them had Broadcom in there, and some of the other
Yes.
ones that I didn't like as their biggest positions.
Yep.
And I'll just end with this: don't look at what was the other one that broke really bad? Was it A Lab or something like that that broke?
And the chips, yeah. A
In the
Lab, A Lab broke really hard yesterday. I mean, you know, it was up 7-8% today, but I mean, given yesterday's action, it looks like a blip, right?
Yeah. So I just want to leave people with this: like, don't unless you've made done a lot of studying on buying these things in these weak positions, please don't go out and do this. Yes, you could get these big bounces like the people who did this bought at the close yesterday, made a ton of money today, 7-10% on a lot of things, and more in some cases. But in the end, that's a really hard game to play. So please don't do that. If anything, just stick with stocks where they're above their 50 and they're 200. Like,
Yeah.
don't buy broken things, because you can get really hurt. I just don't want to see anyone get hurt. And I'm sorry for anyone who had a trouble yesterday. That's yeah, that's a rough one, but learn from it, and you'll do better for the next time.
hmm Well, thanks a lot, Mike. That is going to wrap it up for us this week. We will be back next week, and again, we hope to go through many more of those precedents. If those are still holding, we may cover some of those later on in this week on IBD Live. So you can look forward to that. You can always check us out there if you haven't already, www.investors.com/IBD Live. I'll be hosting tomorrow because Allie's still a little bit under the weather. Also, make sure you're checking out our videos after the market close every day. And Webby does a nice extended version on Fridays. Again, every day after the close for that stock market today wrap up of the day's action. So thanks a lot for watching this week. We'll see you next time. Bye now.